Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage. Welcome to another edition of Java with Jared. Once again, happy Friday. Hope you guys are doing fantastic. Well, the market finished this week with rates slightly worse than where they ended last week. We did see the CPI number come out, and the CPI number is Consumer Price Index, and that measures inflation at the consumer level. The headline number was actually flat on the monthly number, where there was no increase or decrease. And the year-over-year number came in up 0.8%. Now, the core rate, which factors out the volatile food and energy portion, that showed an increase on the month-over-month number of 0.1%. But the annual number, the year-over-year number, came in slightly less, going from 2.3 down to 2.2%. So basically what that shows is that while inflation is, at least on the CPI number, is on a year-over-year basis over the Fed's target rate of 2%, it's not really increasing at a great rate. And actually, the Federal Reserve, their favorite measure of inflation is actually the PCE. So the Consumer Price Index, even though it measures inflation at the consumer level, it's not the Fed's favorite gauge of inflation. But it is showing that it is over the Federal Reserve's target rate of about 2%. We also did see housing starts come in this week. That was slightly higher than expectations. Building permits were actually a little bit lower than expectations. The housing starts were primarily in the multifamily, rental units level, so nothing really big there. What the market participants were really looking at this week, though, was the Fed minutes were released, and they wanted to see what the Federal Reserve was actually saying about whether they were going to increase or decrease the Fed funds and discount rate in the future. Now remember, though, we did have to take the Fed meetings with a bit of a grain of salt because the jobs number, when we saw the blockbuster jobs number at the beginning of this month, the Federal Reserve meeting was prior to that, so it didn't factor in the stronger jobs number. And the Fed minutes were a little bit more hawkish, meaning leaning more towards raising interest rates than what they had been previously. Not dramatically hawkish, but there just was a little bit more bent to potentially increasing interest rates. Also this week, the Federal Reserve board members were actually out talking and doing speeches. And again, it's really mixed. There is a little bit more of a bent, though, towards rising interest rates or for them increasing the Fed funds and discount rates. Now remember, that may not be all that bad. A lot of times what we see when the Federal Reserve increases credit, even when the economy is not, or when the economy is not, really increasing at a high level, that could actually help interest rates because it curbs inflation in the future, and 30-year fixed rates are based upon what's going to happen in the future. So a Federal Reserve increase in credit may not be all that bad. And we actually did see a bit of an improvement on Wednesday after the release of the Federal Reserve minutes. Now, next week is going to be a real big week because not just because of the economic data. We are going to see a lot of stuff from housing. Also, GDP is going to come out. But it's really going to be because the Federal Reserve chairperson, Janet Yellen, will be speaking in Jackson Hole, Wyoming for the economic summit that they have every year. And the market will really be looking towards Janet Yellen and what she is saying and if there's going to be another hike. Now, there's only going to be 3 more Fed meetings by the end of this year. There's one in September, one in November, very beginning of November, and one in December. It's not likely that the Federal Reserve will do anything in November because that's right before the election. So if the Federal Reserve is going to hike, it would either be September or maybe December. So the market is just going to be wondering, is the Federal Reserve actually going to want to do something before the election? My guess is probably not. If they do hike this year, it would probably be maybe more of a symbolic move sometime in December. And right now, the Federal Reserve is just kind of preparing everybody for that. But who knows what will happen. Right now, we're at a very, very kind of important level from a technical basis. The market has been trading in a very, very tight range. And once it breaks out either positively or negatively, there could be a pretty big movement here. So from a technical perspective, we're at a really important level, and there could be a lot of volatility. So no one knows exactly what's going to happen. The bottom line is interest rates are going to be great for the remainder of the year, probably into the beginning of next year. So there's just going to be a lot of just guessing as to what the Federal Reserve is going to do. It's going to be a lot of talk. Interest rates will remain really, really great. at least that's what it looks like right now. So no one knows what's going to happen, but things are probably going to be pretty good for a while. Hope you're doing wonderful. Hope you're having a wonderful end of the summer. If you have any questions, please give me a call. That's what's going on with the market. So hopefully this will help you talk intelligently to your clients about what interest rates are looking like and between now and the end of the year. But you can tell your clients they're going to be looking good. Thanks for joining me. We'll talk to you soon. Bye-bye.